Major advice that will benefit Tesla stockholders financially in the long run was just provided by Elon Musk. Although the well-known investor Warren Buffett and Elon Musk may not agree on the long-term value of cryptocurrencies, they seem to share comparable stock market trading ideas. It only seems logical that their advice be trusted given that they are two of the wealthiest persons on the planet. In a Sunday tweet, Elon Musk, the world's richest man based on the Bloomberg Billionaires Index, provided some financial guidance. Since I'm asked a lot, I would advise investing in stocks of several companies that provide goods and services you support. Sell only if you think the company's offerings are becoming worse. Don't panic when the market rises. The tweet is reminiscent of the value investing tenets popularized by Warren Buffett. What is the significance of Musk's counsel and how does it relate to Tesla stock? Make sure to stay tuned as we go into this. The CEO of SpaceX and Tesla, Elon Musk, has disclosed his investing strategy, which he thinks will pay off in the long run. Some have drawn comparisons between Musk's approach and Berkshire Hathaway CEO Warren Buffett. In a tweet, Musk made it clear that investors should back businesses whose goods and services they really believe in, and that they should only sell their holdings when they see a decline in the quality of the company's offerings. There were differing reactions to his tweet on several issues, such as whether or not highly overpriced stock should be held for the long term and whether or not all market swings should be disregarded. Musk was supported by some and opposed by others. Some interpreted Musk's advice as a sign that his electric vehicle company, Tesla, was about to get some unfavorable news. We don't think so, as experts like Buffett have demonstrated. Investing in stocks is a reliable means of accumulating money, and Musk's counsel aligns with Buffett's dogma value investing concepts. You only buy those from businesses whose business ideas you comprehend and have faith in. Value stocks should ideally be inexpensive companies with room to grow in revenue over time if you decide to invest in them. Since value investors search for deals based on their own analysis of a company's intrinsic value, they typically don't follow trends or short-term stock moves in the market. By this reasoning, Twitter, for instance, represents a good investment for Musk, given that its board has approved his $44 billion takeover bid. He plans to unlock the potentially enormously promising networking service, according to a statement announcing the transaction. Musk cautioned his followers, stating, "Don't panic when the market panics." Warren Buffett is cited by Musk as advocating against following the herd even during bear markets, saying, "Be greedy when others are scared and fearful when others are greedy." In March, Musk posted another tweet about inflation, stating that in general, it's better to own tangible assets, like as a home or stock in companies you believe provide quality goods, than to keep your cash on hand during times of high inflation. Musk, who has recently come to the forefront of the cryptocurrency revolution, cautioned against placing all of your money on cryptocurrencies, saying that the true meaning of value is found in creating goods and providing services to other people, not in money. A small number of supporters of cryptocurrencies have revealed that, in a departure from the majority of cryptocurrency investors, they have been heeding Musk's advice and funding projects they support, independent of the underlying coin valuations. For a moment, let's take a closer look at value investing. Buying stocks that, according to fundamental analysis, seem to be undervalued is the practice of value investing. Value investing originates from the investment concept of David Dodd and Benjamin Graham, which they first taught at Columbia Business School in 1928 and then expanded upon in their 1934 book Security Analysis. Prominent proponents like Warren Buffett, the chairman of Berkshire Hathaway, claim that purchasing stocks below their intrinsic worth is the essence of value investing. Buying undervalued equities, where the present price is far less than what it should be, is considered value in that context. Notes or thinkings. As Tesla, not a growth stock. How does this relate to Tesla? Then value businesses did not always beat growth shares as the late 1990s showed. Moreover, strong performance from value stocks doesn't always mean an inefficient market. Alternatively, it can suggest that value stocks demand higher returns because they carry greater risk. Applying the value investing concept in this case may be challenging because a lot of people think Tesla is overvalued, as this channel's numerous films have addressed. We think it is evidently not the case. Among the early value opportunities identified by Graham and Dodd were stocks of public companies trading at a discount to book value or tangible book value, those with stable dividend yields, and those with low price to earnings multiples or low price to book ratios. Purchasing shares at a discount is a crucial component of value investing. It's crucial to remember that even if stocks seem to be discounted at one point, they may still decline in value as the market does when purchasing them during a bear market. Conversely, if shares aren't purchased during a bull market, the market's price increase may because the shares do initially seem pricey. Moreover, a prevalent critique of price-centric value investing is that it often misleads retail investors by emphasizing cheap prices and recently fallen prices. This is due to the fact that historically low and recently depressed prices frequently signify a fundamentally sound distinction or alteration in relative financial health of an organization. Here, finding early value potential is crucial. How is that accomplished? Musk suggests it's crucial to critically assess the company you're investing and look into potential future chances that will lead to larger profits rather than blindly following the opinions of the majority or the fluctuations in the market. This entails examining the company's values, objectives, goods, and services, as well as its short and long-term plans. We wholeheartedly concur with Musk's advice to look ahead and concentrate on the long term. Let's now apply this idea to Tesla. As we previously stated, a lot of people think Tesla is overpriced at its $865 pricing point. For investors, Tesla presents a conundrum because it is both costly and inexpensive at the same time. Assume the business is valued exclusively on the basis of the quantity of cars sold multiplied by the average selling price of those vehicles, treating it as a pure automobile company. The expert thinks it might be overvalued in that scenario. However, the company is incredibly undervalued for an onshore green energy infrastructure provider. Rather than its prior success, Tesla's potential growth is the main factor driving stock purchases by investors. The only way to evaluate Tesla is via the prism of its evolution. In practical application, we find that the company's current market price makes more sense than it does at first glance. For this reason, it's critical that you conduct due diligence, defy popular opinion, and learn about the specifics of any company you intend to invest in. In this manner, your investing strategy will have a strong basis. Many have speculated that Musk is attempting to purchase Twitter by using the strategy. The richest businessman in the world decided to pay $44 billion to acquire all of the social networking site last Monday. Musk liquidated around $8.05 billion worth of Tesla shares in 3 days after Twitter's acquisition was announced. Musk announced the sale of 9.6 million shares in document submitted to the SEC on Thursday and Friday. The trades were made for $822.68 to $999.13 in total US dollars. Additionally, Musk sold more than 4.4 million company shares for a total estimated worth of $4 billion in order to use the $21 billion to buy the microblogging website. Musk must spend the money in his own name. In addition, Musk has made the decision to seek outside funding in order to help him raise a portion of the money required to purchase Twitter. Bloomberg reports that 19 investors, including Saudi Prince, Sequoia Capital, and billionaire Larry Ellison had committed $7.01 billion of Twitter's $44 valuation. As part of the agreement, Morgan Stanley and other financial institutions have committed to lending $12.05 billion in margin loans against Musk's shares in Tesla and other companies, in addition to providing $13 billion. Given his track record, we anticipate that Musk will profit handsomely from his Twitter investment in the future and are interested to watch how he implements his investment advice. How do you choose a stock to put money into? Please leave a comment below.